Welcome to The Explainer. I am absolutely pumped to have you here today because we're looking into one of the most talked about platforms in the entire precious metals space. Our goal for today is really simple. We're going to cut straight through all that marketing noise to deliver a truly honest, totally data-driven review of BullionVault. We're pulling back the curtain on their actual tariffs, the real security mechanics, and the fine print that ultimately dictates what you're actually paying out of pocket. Okay, let's dive straight into this. Here is our structural roadmap for today's review. Number 1, what is BullionVault? 2, the good stuff, security and costs. 3, the catch, looking at hidden fees. 4, BullionVault versus its competitors. And finally, number 5, the final verdict. Section 1, what is BullionVault? The scale and mechanics of the platform. To really wrap your head around the sheer scope of BullionVault, you've got to look at this massive number right here, $9 billion. That's the value of client assets currently under custody on this platform. With over 130,000 users globally spread across 175 countries, we're not talking about some small startup operation here. They've been around since 2005, and they are a full member of the London Bullion Market Association. It's an institution with incredible scale and credibility, which means you aren't just trusting your hard-earned wealth to a fly-by-night operation. Now, the reason they can handle so much volume really comes down to this core mechanic. BullionVault is a peer-to-peer marketplace. It is not a traditional retail store where you just click buy and pay some massive markup to the dealer. Instead, it's a live 24/7 order book. It's actually a lot like a stock exchange. You are buying and selling wholesale gold directly with other users on the platform. Grasping this specific mechanic is absolutely crucial for understanding exactly how they manage to keep their upfront costs so low.
Moving to Section 2, the good, security and costs. Why investors choose this platform.
Now, what's really interesting about this is the sheer value you get compared to the wider market. It's honestly striking. Their standard trading commission sits at just 0.50%, and if you're trading in high volumes, that drops all the way down to a microscopic 0.05%. Annual gold custody? A mere 0.12%, plus completely free account opening and deposits. When you realize that physical retail dealers will often charge you a 2 to 5% premium just to buy the gold in the first place, you can instantly see why these rates are so incredibly attractive to serious investors. But hey, low costs don't mean much without security, right? Well, BullionVault handles this with a remarkably transparent daily independent audit process. Every single working day, world-class vault operators, we're talking Brinks and Loomis, send in their bar lists. Then, independent auditors physically verify those bars. And finally, the results are publicly reconciled against all user holdings online. Literally, no other gold platform offers this relentless, daily level of public transparency. And if you're sitting there wondering, well, what happens if BullionVault itself goes out of business? Here is your answer. Your bullion is your outright property. It's held under what's legally called a bailment arrangement. This is a very specific legal status, and what it means is that the gold never actually sits on BullionVault's balance sheet. So if the company were to somehow go bust, their creditors legally cannot touch your gold. It belongs entirely, 100% to you. Let's move into Section 3, the catch, hidden fees, the fine print you need to know. When we analyzed real user experiences for this explainer, a pretty clear pattern of friction emerged. New users are frequently caught completely off guard by recurring monthly storage fees that actually end up feeling quite expensive over time. While the headline rates look absolutely amazing on the homepage, there are minimums and structural fees buried deep in the fine print that you absolutely have to be prepared for. Let me break down the critical math here, because this is huge. BullionVault charges a flat $4 per month minimum storage fee for gold. So if you hold, say, 5,000 pounds worth of gold, you just pay the standard 0.12%, which works out to about £6 a year. That's great. But if you only have a 1,000 pound account, that $4 monthly minimum instantly kicks in. That totals $48 a year, which pushes your effective annual storage rate way up to nearly 3.7%. So in essence, small accounts are penalized simply by existing. So, the crucial point here is that to keep your costs low, you must play exactly by their rules. Just look at these penalty charges we pulled straight from their official tariff document. Take longer than 8 weeks to validate your ID? Boom, $30 monthly penalty. Deposit money from an unlinked bank account? $30 flat fee. Decide you want to withdraw your physical gold in small amounts? You are going to face a 1 to 7.5% penalty, and that's on top of transport costs. And amazingly, even just needing a password reset over the phone is going to cost you $20. It is a highly mechanized system with virtually zero tolerance for user error.
Section 4, BullionVault versus competitors, how it stacks up against the rest of the market.
When we compare them to one of their main rivals, gold money, we see a really fascinating contrast. While BullionVault's minimums definitely hurt small investors, gold monies are actually much steeper. Gold money enforces a $10 a month minimum storage fee. Furthermore, if you ever want physical delivery from BullionVault, you can start with a 100-gram bar. Gold money, however, requires you to withdraw at least 1 full kilogram of gold at a time. So despite its incredibly strict rules, BullionVault is still significantly more accessible for the average retail investor than gold money is. Now, if you're an investor in the UK, comparing this to the Royal Mint is absolutely vital. You are essentially choosing between entirely different investment strategies here. BullionVault offers the lowest fees globally, sure, but it deals in wholesale bars, which are completely subject to UK capital gains tax. The Royal Mint, on the other hand, charges higher premiums up front, but they offer legal tender Britannia coins, which are entirely CGT-free. You just have to decide what's more important to you, the lowest possible upfront fees or securing long-term tax exemptions. And speaking of taxes, we really need to look at the broader tax landscape. While investment gold generally avoids VAT, capital gains taxes can definitely take a big bite out of your overall profits down the line. This is exactly why a lot of US-based investors prioritize tax advantages by utilizing gold IRAs to hold physical metals inside a retirement-friendly wrapper. Because navigating these tax-efficient wrappers can get a little complex, we've linked a free gold IRA guide right down in the description for you, or you can grab it at goldirablueprint.com just to help you optimize your own long-term strategy. And finally, Section 5, the final verdict. Who should actually use this platform? All right, here is the absolute bottom line. BullionVault is a fantastic fit for cost-conscious investors who are putting in at least £1,000 or dollars and who feel totally comfortable navigating financial trading screens. Honestly, it is unmatched for cheap, secure, large-scale storage. However, it is definitively not for absolute beginners who just want a highly polished, simple mobile app. It's pretty terrible for tiny accounts under £250 because those minimum fees will eat you alive. And it's absolutely not for you if your ultimate goal is to build a collection of physical gold coins to keep at your house. And that brings us to the ultimate question you really have to ask yourself before you open an account. Are the absolute lowest trading fees on the entire global market worth navigating a steeper learning curve, a slightly intimidating interface, and a highly unforgiving penalty structure? It really all comes down to a trade-off between total cost efficiency and your own user convenience. I will leave you to weigh those priorities for your own portfolio. Thank you so much for joining me for this explainer, and keep exploring.